Welcome back. You're watching Market Fatafat on ET Now, show where we get to all the stocks that are buzzing based on news flow as well as on technicals. And talking about the news flow, Vinny, you had Newgen Software that had actually come out with their earnings, isn't it? How were the numbers for Newgen Software? But it came out
yesterday, I think. Yesterday during the show it came out. But look at the run-up that the stock is still seeing, and that's why I want to take a mention of this as well. Second consecutive day of gains that we're seeing coming in today, and Newgen Software as of now also is flying away high in trade as well. And when you look at the numbers, how they have come out as well, let's just take a check in terms of what is the revenue growth. That was at around 17% on a quarter-on-quarter basis. Margins have seen a sharp improvement, and look at the margin expansion as well, 19.5% versus 12.8%, so more than 500-600 basis point expansion, and that is the main reason, the improvement that we've seen in terms of revenue and even the margin expansion, that's keeping the stock abuzz as well. And second consecutive day of gain that we've seen coming in for Newgen Software as well.
All right, moving on, let's talk about Biocon, because that particular stock had actually slumped to a 3-month low in today's trading session. Now 7% downtick coming in for Biocon. The US FDA has classified its inspection of the unit's insulin manufacturing facility in Malaysia as official action indicated, or OAI. What the company is saying is that the OAI status may cause delay or withholding of pending products approvals or supplements from the facility. The company is also saying that this will not have a material impact on the manufacturing and distribution of the company's commercial products for the US markets, with the fact that US FDA has given the OAI for one of its plants in Malaysia. The stock is slumping away, 7% downtick.
Okay, that is Biocon for y'all. Let's keep an eye on that one. But let's bring on board our technical analyst for now. We have Nirav Chheda joining in with us as well. Nirav, a very good afternoon to you as well. And let's talk about your first stock that you're going to tell us about is Paytm. Now, when you look at Paytm, last 1 month, 8% return. Last 6 months, that's where we're seeing good returns coming in, right, in that 6-month period. But last 1 month has been more sort of muted. What's the view now on Paytm? Where do you see it headed from here on?
Hi everyone, thank you for having me again. In terms of Paytm, last 6 months this stock has definitely done well. From sub 500 odd levels it has come up, but the overall pattern is very, very positive. A rounding kind of a formation on the lower end. Volumes have come in. Every time it breaks out above a consolidation pattern, volumes have come in. So that is a very big positive. Most of the indicators are positive as well. This stock has broken out above the 920 levels, which was an important resistance. It has retested that in the last couple of days. And then again, you're seeing some good buying action going forward now. I believe this stock is headed towards the 1040, 1050 levels, which can only be a near-term target, because in the medium term it can probably head towards 1250 odd. So buy for those targets with a stop loss of around 910.
All right, let's move on then. And Ramakshi, let's talk about Bajaj Finance, a stock that you track pretty closely. How are the numbers for Bajaj Finance? What are the brokerages saying?
Well, Cheryl, the numbers were largely in line with what the street was penciling in, and in fact in line with our estimates as well. Let's talk about the net interest income that has seen an uptick of almost 30% on a year-on-year basis, now coming in at 7,197 odd crores. PPOP has also seen a jump of almost 30%, while the net profit is up nearly 28%. Asset quality, however, has seen a bit of a deterioration for Bajaj Finance when it comes to the GNPA, that has moderated very marginally on a sequential basis from 0.87% to 0.91%. NNPA, however, has stayed flat sequentially, standing at 0.31%. Largely, the management has highlighted that they're expecting 25 to 30 basis points of NIMS compression to come in FY24. That would be mainly driven by a rise in the cost of funds. Operating leverage, in their opinion, is expected to play a very important role when it comes to offsetting the pressure on the net interest margin. Now, they also highlighted that the risk metrics across all businesses were stable except for rural B2C. They will be looking at the listing of their housing finance subsidiary over the next 8 quarters. So all in all, the management has highlighted that there has been a strong momentum in the first half of the year, but nevertheless we're seeing deterioration, some bit of it in the asset quality. So on the back of that, keep an eye out on Bajaj Finance.
Let's move on to stock number 21. And Nirav, you picked out Confidence Petroleum for us. And this is not a stock that I've seen making your list. So this is a new one in terms of an addition there. What is your view in terms of the charts and technical levels? Because the first half of the year, when you compare it till almost June, the stock was pretty much subdued in trade. And after that, we've seen a run-up coming in for the stock. So what is now the view coming in? Should one actually start looking at booking profits or maybe add a bit more here? Okay, I think we'll get back to Nirav. We've connected on a patchy line, so we'll connect back with him. But let's move on to the next stock till then. And Ashesha, you have picked out metal stocks for us, the whole metal pack. Why is that in focus and what is the news flow?
Well, yes, in fact, the Nifty Metal Index was the biggest sectoral gainer earlier in the day, but has now dipped. It is significantly off from the day's highest point, now sitting with a cut of 0.3%. Positive news flow from China is why metal stocks were buzzing earlier in the day. China's September retail sales rose by about 5.5% on a year-on-year basis versus expectations of about 4.9%. September industrial output too rose much better than expected at about 4.5% YOY. Third quarter GDP data came positively surprised the street. It came in at 4.9% versus street expectations of 4.5%. Positive data, macro data that came in from China, which is a positive for all of these metal stocks, and which is why the stocks were gaining in trade today. Now, of course, it is off from the day's highs.
Alright, moving on, Nirav, you were just going to talk about, I beg your pardon, Confidence Petro and why that one was making to your list. We lost you on that note, but why is it featuring in your list for the first time?
Yes, so oil and gas, most of the stocks are breaking out. This stock has also broken out above the 80 levels, and then it has come down to retest it. It went about up to about the 100 level, came down to retest it. Now it is again breaking out. So this is a very strong pattern. The retest is done and volumes have come in. I believe this stock is headed higher towards that 115, 120 odd levels and in quick time. So one can look to buy the stock at current levels. 80 should be a stop loss.
Okay, let's move on and then talk about Mascot Dock. And why is this one in focus today as of now is that the company has actually signed a contract for with the acquisition wing of Ministry of Defence for construction and delivery of one training ship for Indian Coast Guard, and the cost of that is 310 crore rupees, and this was on 17th of October. The stock was buzzing in trade, early morning trade, but with the markets seem like the stock price has given up most of its gains as well. But I can see some bit of Polycab numbers coming in as well. We'll wait for some more numbers and then talk about that, but surely keeping an eye out on Mascot Dock as of now.
All right, moving on then, Nirav, let's talk about ONGC. And ONGC definitely was in news today because of the windfall tax revision that came in from the government. But apart from that, how is it looking on the charts to you, given the fact that this also depends upon the movement coming in the crude prices?
So see, the crude has gone up from sub 80 levels to about 90 odd. But the stock hasn't moved up much, probably also because of windfall tax of the government. But this stock pattern, it is ready to move up from here to about 200 to 20 odd levels. I believe downside is minimal. Good volumes have been seen, and inwards head and shoulder pattern breakout has been seen around 175 odd levels. So the stock is ready. You can go ahead and buy with a stop loss of around 178, and you can probably witness 200 in this month and probably 220 coming in the next 10-15 days.
On the bottom of the screen, you can see the Polycab numbers that are flashing actually. Let me take you through the numbers then. If you look at the profit, it's coming higher by approximately 59% on a year-on-year basis, coming in at around 426 odd crore rupees. If you look at the revenues, they've come in at around 4,217 crore rupees. That's an uptick of as much as 26%. If you look at the margins also, on a year-on-year basis, there's an uptick in the margins. The margins have come in at around 14.4%. As against around 12% on a year-on-year basis. The margin, 12.8% on a year-on-year basis. So that's the way how the numbers are looking like at this point in time. Let's see the expectations that we had. We expected the profits to come in at approximately 391 crore rupees. We expected the revenue to come in at around 4,063 crore rupees. If you look at the margins, they are in line with what we were expecting. We were expecting a margin of approximately 14%, and that's where the margins have also come in for Polycab. If you look at the EBITDA, is coming at around 608 crore rupees. We were expecting the EBITDA to come in at around 560. So if you look at the numbers, the PAT is above, the revenue as well as the margins are in line with numbers. I'll request my producer to just update the line graph that you can see on your screen, because the stock is down now, is down in excess of 1.5%. So that's Polycab for you, Vinny.
Absolutely, that is Polycab. Surely keeping an eye out on these numbers there, because seems like as of now it was in line, but surely some bit of a subduedness that has come out in the stock price as well. So maybe in terms of some commentary that may be coming in, that is something to watch out for as well, especially in terms of when you're looking at the wires and cable segment, that has seen a decent growth as well on a year-on-year basis. So keeping an eye out on Polycab today as of now for sure, Cheryl. But let's move on and talk about Kirloskar Oil Engines. And Nirav, that's a stock that you've picked out for us today on the charts. Why is it making your list? Would you still suggest a buy coming in at current levels for Kirloskar Oil Engines?
Yes. The reason for this is that, post 2017, the stock has witnessed a breakout, after a span of 5-6 years. And, that breakout came in at around 460 odd. Based on the breakout, the target for this stock comes to around 700, 750 odd, and that should come very fast. So at this point of time, Kirloskar engine, the overall pattern suggests that this stock is now ready to move higher from current levels. It had witnessed a breakout yesterday above that 550 odd levels, but today it has come down a bit. I believe one can look to buy the stock at current levels. You can keep a stop loss of around 520 for your longs, and probably 650, 680 is coming very soon, and probably if you hold on, 750 will come.
Let's move on and let's talk about Finolex cables. That particular counter is in focus in today's trading session. Remember that you had a case that's going on in the Supreme Court, and the Supreme Court today has set aside the NCLAT's October 13 judgment, which had allowed Deepak Chabaria to continue as the executive chairman and the whole-time director of Finolex Cable. If you look at the case that transpired today, the bench led by Chief CJI actually directed the chairperson of the Appellate Tribunal, Justice Ashok Bhushan, to hear afresh the case involving the Orbit Electrics and Finolex cables. Furthermore, the Supreme Court has actually observed that it was prima facie of the view that the judicial as well as the technical power are liable to be proceeded against for the contempt of court. So to just break it down in simple words, the Supreme Court has issued a contempt notice to NCLAT bench in Finolex cables case. Apart from that, what they have done is they've junked the NCLAT nod for Deepak Chabaria as Finolex cables chairman, and they've asked the NCLAT to hear the case afresh. And as you can see on your screen, 2.3% downtick coming in for Finolex cables.
Okay. Let's move on to the next one, and that is Canfin Home. Amakshi, why is Canfin Home in focus? I believe this is on the back of its numbers as well.
Well, yes, the stock is in focus on the back of its numbers. A mixed set for Canfin Homes. When we look at the net interest income as well as the net interest margin, that was a beat, but the company did miss out in terms of growth as well as asset quality. Let's first focus in on net interest income. That has seen an uptick of almost 26% on a year-on-year basis, standing at 317 odd crores. The net interest margin has seen an improvement of almost 25 basis points on a year-on-year basis, standing at 3.8%. And the better net interest margin was largely a function of better yields in terms of their loans. Apart from that, when we talk about the pre-provisioning operating profit, that has also seen an uptick of almost 25%. The provisions, however, as expected, were higher, coming in at around 72 odd crores, and this actually included the impact of the Ambala branch fraud. Provisions have seen an uptick of almost 5.1 times sequentially. The net profit has also come in higher by nearly 11.5%, but the asset quality for this counter has seen a deterioration of nearly 13 basis points sequentially, coming in at 0.76%, while the net NPA has actually deteriorated by nearly 9 basis points. So all in all, a mixed set for Canfin Homes, and that is the reason why the stock is in focus today.
Alright, that's Canfin Homes for you, but we also spoke to the MD and CEO of Canfin Homes earlier on to talk about the growth that they are expecting in the future quarters, and also if they are able or they will be able to maintain their growth guidance. Listen into what they have to say.
Q3 and Q4, we are very hopeful we'll be able to do better. And we had a good first quarter also. It's only because of the second quarter where slightly it has gone down. But again, Q3 and Q4, we should be able to pick up. So by the end of the year, we'll definitely clock a good growth. We are quite hopeful because the market has been very positive about it. This quarter, another small thing is that, prepayments there has been a little uptick in the prepayments, which also we are addressing. So that will be one of the monitorables. Otherwise, in terms of the disbursement, we will be able to pick up. So it should help. We had originally anticipated a disbursement around 10,500 crores. So this quarter being a little slightly lower, we'll try to catch up. So at least, compared to 8,900, we should end up somewhere around 10,000 crore at least by the end of the year. And this will also, even if we do a little better than what is in the third and Q3 and Q4 compared to last year's, we should be able to easily reach 10,000 crores.
Okay, moving on from Canfin Home to Gujarat Narmada Valley Fertilizers and Chemicals. That's GNFC as we know it as. Nirav, when you look at the charts in the last 6 months, every time it's managed to touch these 650 and around those levels, again we see a correction coming in. So now what is the indication coming in? Do you think we're going to surpass and continue going upwards for GNFC from here on for the stock, or maybe a correction is in due?
So I think the stock is likely to move up from here. Reason being, a 2-year consolidation is over, and now the stock is headed higher. Very importantly, after the breakout, the retest is done. So in technicals, retest is very important. That has been done. That has been done around the 540 odd level. It is 100 rupees up from there. Also, a consolidation breakout has come in again fresh above the 650 odd levels, and it is trading above the same levels. Closing also has been above this level. So the next set of resistance areas for this particular stock is around 750, 750 odd levels. The stock should come in around that 750, 760 zone. Also, fertilizer as a pack has started to move up. A lot of stocks have witnessed breakout. So this is also one of the stocks which has witnessed a price volume breakout. So it should do well going forward.
Alright, that is GNFC for you, but VST Industries, that's the one that is in focus in today's trading session. As you saw a downtick of as much as 3% earlier on in the trade. The stock hit a 5-month low on an intraday basis. The company had posted approximately 18% year-on-year fall in their September quarter PAT, coming at around 75.9 crore rupees. If you look at the revenue from operations, that's an uptick of about 2.8%, coming at around 452 crore rupees, while the expenses, there's the total expenses that actually jumped 8.07%. That's one of the reasons why you saw a downtick coming in the profits for VST Industries, and you can see the stock on your screens, 2% downtick coming in for VST.
Okay, let's move on and talk about Electronics Mart then, Nirav. I think this is also not a one that you've spoken about in a long time. So Electronics Mart on the charts, what's the indication you're picking up over here? And what is the view going forward from here in the next short term as well as the long term?
So this is again a new entrant to the list. I believe after a long consolidation, once that breakout of 100 has come in, the stock has actually moved up quite significantly and still has potential to move up significantly from current levels. Look to buy the stock at current levels. A flag kind of a formation breakout has come in at 155 after a big consolidation in the past 5-6 weeks. So that breakout has come in. The target for this breakout is around 195 to 200 odd. That is where you book your profits once it comes, and your stop loss is around 155.
Alright, moving on then, Ashesha, ICICI Pru, that one also I believe is an earnings candidate.
Well, yes, it is an earnings candidate. Weak set of results. Brokerages too are not very bullish with the kind of numbers that it has reported. The stock has recovered from the lowest point of the day, but despite that, sitting with a cut of over 2.5%. VNB margins came in at 28.8% versus 31% for the first half. Large channels underperformed, which dragged APE growth for the company in the quarter gone by. Jefferies has come out with a note. They've maintained their buy, but they've cut their target price from 700 to 670. They say second quarter was weak with marginal rise in APE, while VNB declined due to compression in margins. Morgan Stanley, meanwhile, has also maintained its overweight stance, but they've cut their target price from 685 to 665. They say VNB was 8% below what they were working with. VNB margin was low on account of product mix shift and likely some product level margin compression that the company experienced in the quarter gone by. Stock performance, however, they say will be muted in the near term. So both brokerages have gone ahead and cut their target price. Numbers clearly were weak, and the stock is reacting to that, over 2.5% lower in trade.
Alright, flashes on the bottom of your screen coming in from that joint press conference that's been held in Israel, that is US President Joe Biden along with the Israeli Prime Minister Netanyahu. And let's take a look at the commentary that is coming in from that particular front. I'll just check if we can cut across to and hear out what they're saying. But for now, what Biden is saying, that he's saddened by and outraged by the Gaza hospital explosion. He's also stating that Hamas has committed atrocities that make ISIS actually look more rational, is what US President Joe Biden is saying at this point in time. Also, he's saying from what he's seen, the hospital explosion is caused by the other side. On the other hand, you have the Israeli Prime Minister who's saying that Hamas has killed about 1,400 Israelis on October 7th, and the civilized world must unite to defeat Hamas. Also, Biden's visit to Israel at the time of war is deeply, deeply moving, is what the Israeli Prime Minister is saying. So yes, that's the visual on your screen, the currently joint press conference. You remember the US President Joe Biden arrived in Israel just a short while ago.
Absolutely, just arrived a short while ago, and some commentary that is coming in from the press meet that they're holding over there as well. But on that note, we're absolutely out of time on this edition of Market Fatafat on ET Now. Thank you so much, Nirav, for joining in with us, as well as Vamakshi, as well as Ashesha. And with that, viewers, it's a goodbye from Cheryl, myself, as well as the team who put the show together. Don't go anywhere. Closing trades will take the action forward.